Good morning, everyone. It's Ben Buckner and Dan Basse with Ag Resource Company in Chicago. Markets are mixed again. The grind continues. We do have some life being shown in the soy complex. Meal has extended its recovery. Oil is up a little bit, and soybeans have followed. Supply pressures, though, I don't think going away, at least for the next 4 to 6 weeks. We've got some very high private big-time yield estimates. Corn being weak, I think, also makes more sense than soybeans. The Louisiana crop this week is 22% harvested. Georgia's 11% harvested. That is probably something like 35 million bushels of new crop corn entering the pipeline already. And so the southern market will be pretty well supplied. Louisiana soybean harvest probably starts in 2 weeks, and that crop is very highly rated, 93% good, excellent. So big picture, not much has changed. But Dan, do you have anything new or different for us this morning?
No, I don't, Ben. I mean, I think a lot of the soybean rally is, of course, looking at, what I would call the opportunities, if you will, for short covering. I don't think it's anything more. You're not going to pull the soybean market up by meal. Meal is going to stay oversupplied, and December meal, if it does make it up to, let's call it $290 a ton, is going to be a great sale. So as you look at the markets going forward, it's the wrong thing that's dragging us up. It's short covering and meal. It's some liquidation, but we've got some big crop estimates here, Ben. If you look at the StoneX estimate that came out yesterday, they pegged the U.S. corn yield at 188.1 bushels an acre. That's a record. That would add 525 million bushels to the U.S. corn supply, and that would take USDA's end stocks probably back up to about 2.1 billion bushels. So to your point, it's going to be very difficult to have a rally in corn if you're going to be having end stocks over 2 billion bushels. And actually, by the end of the crop year, due to lower exports, we think those numbers can be 2.3 or 2.4 billion. If you look at soybeans, 53.6, it's 1.1 bushels an acre above the USDA's estimate. That adds about 90 million bushels to supply. That means that we'd have 400 million bushels in old crop. If you adjust with exports at all because of China, you could end up closer to 500 or 600 million. So as we go forward, these big crop estimates will weigh in the market. We'll get the old Informa group now at SB Global out today. They'll give us our estimates sometime this morning. I expect others later this week. So again, the grain pile is still growing. If you look at good to excellent ratings that came out from NASS yesterday, corn steady at 73%, good to excellent. That's been the case for the last 3 weeks. Soybeans down a percentage to 69, good to excellent. But historically, look how we are above last year and the 5-year average. And the corn in particular, it shows you the consistency of this lush green corn crop across the Midwest that's doing so well. As you look at the comparable weeks, and you start to move forward, you can see that, when you look at the overall tone of things, the U.S. corn crop is the best rated looking backwards to 2016. So this is a special corn crop with another couple of weeks of good weather. Again, a yield even as high as 190 cannot be ruled out. As you look at, of course, the soybean ratings, you can see here the best since 2020. We'll see how August weather treats the crop. But again, very highly rated crops that are going to have strong yield potential. As you look at soil moisture in the first 16 inches of the soil, you can see here that we've got an abundance. At least today, no problems. We can go another couple of weeks without rain and really not hurt yield potential. But as you look at the chance for a jet stream stagnation, I think that very warm water that stretches from northern China all the way to the Gulf of Alaska really argues against that. So showers and storms should be kicking off in the Midwest again starting this weekend with nearly daily shower chances thereafter. So no real problems in terms of the long-term weather. It will be warmer, but I see with the rainfall that's really non-threatening at this point. Brazilian corn export loadings by vessels are still rising. As of August 1st, we're now up to around 7.4 million metric tons, so a big increase there. We believe the Brazilian corn program is underway. It's going to be sizable. We think Brazil can export 43 million metric tons of corn, and that will cut into U.S. export potential longer term. As you think about end stocks and what the market's telling us, balance sheet to your left has way too many numbers, so I put that circle there. Where your eyes should go is stocks to use ratio. If Ag Resource is right and we have stocks to use ratio as 14 to 16%, that does correlate with a bottom in corn futures somewhere between 350 and 370 later this month. So again, there's still downside risk in the corn market due to the supply and growing stocks. Finally, as we look at soybeans, the red here in the chart to your right signifies what's coming from Latin America into China. Notice how the U.S. In blue is now a residual supplier to China. If you look at end stocks to the left, Ag Resources now projecting U.S. soybean end stocks in a range of between 370 and 597, or let's call it 600 million bushels. And if you were to ask me today, I think a number that I would be trading would be somewhere around 500 or 525. That tells me that November soybeans struggle on a rally above $10. Let's call it 10.10 where the resistance is. And so I really have trouble here, Ben, expecting the short covering rally in the soybean market to persist. Looking at where price targets are, we're going back to something we've used at Ag Resource several times. The downside target in soybeans is $9.30 for November soybean futures. Corn looks like it has a downside target. Let's call it 360, give or take a dime. So nothing's changed there. This is still a supply-driven bear market. I don't see anything weather-wise or from private crop estimates that would change that view, Ben. Back to you with maybe some summation from you and some ideas of what you think is going on here today.
Yeah, I think very well summarized. And I don't think there's much behind the curtain here. One thing that we really have been disappointed with so far, and as everyone's focused on private crop estimates, including StoneX, we'll get a flood of them over the next 2 or 3 weeks, is wheat demand so far down 10%. We got a full month on the books from the major exporters, and so is that telling us that just stagnation in global grain trade continues? And looking at the demand side of the U.S. balance sheets, it's really just Mother Nature's performance. So you mentioned Brazilian corn. That is a function of some really, really good weather there. Rainfall in June in Mato Grosso. Looking at rainfall in Canada over the next 2 weeks. Mexico still looks pretty normal. So does China. Ukraine, Eastern Europe have improved over the last 30 days. So there's just going to be a lot of stuff being produced in the major exporting market. So it's seeing past harvest to me is there's going to be more competition, at least relative to last year. So I think that's the other side of this thing. Risk management, that's all we're concerned about. So we're looking at recoveries, forward carries, premiums. We still think there is value in those. And so, again, I don't think there's much new. It's just weather in the U.S. Elsewhere looks very good. And we're starting to see yield estimates correlate with what we've seen weather-wise. So I don't think there's much new unless you have any final words before we close it out.
No, I think that's it, Ben. I think it's competition that's forthcoming. Trump tariffs are generally done. We've got big crops. We need to digest them, and the market's going to do it through lower prices. Have a great trading day, everybody. This is Ben and Dan signing off. We'll be back tomorrow with another update of where we think grain markets are heading. Be well, everyone.
Bye-bye.